we detected an unusual trade worth more than $500,000 on Cheesecake Factory stock, ticker symbol CAKE. Looks like someone wants a bigger piece of the cake. But here's what makes this even more interesting. Cheesecake Factory is scheduled to report earnings in a couple of days on October 28th. And so in this video, we'll analyze this unusual option activity to figure out whether this wealthy investor is bullish in buying, expecting the stock to move higher, or bearish in selling, expecting the stock to move lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, including potential access to earnings data before it's public, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, there was unusual option activity on October 24th at 9:55 a.m. at the 2-second mark in these November 21 options at the 60 strike calls. And we can see that there were 4 transactions that were all made at the same exact time for the same options at the same price of $205 per contract. Keep in mind that options prices are shown here, and each options contract controls 100 shares of stock. So to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts costs $205. And so we can calculate the total cost this wealthy investor spent by multiplying the price per contract by the total number of contracts traded. Since these trades were for the same options, we first add up the quantities, 2,360 plus 337 plus 337 plus 336, which equals 3,370 contracts in total. Next, we multiply the total contract by the price per contract, which was $205 each. This gives us a total trade cost of approximately $690,000 for this unusual option activity. But keep in mind, just because a trade is 6 figures does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the more selective trades we share on our website. And so, if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that if you join the membership through our website instead of YouTube, you'll also get additional trade alerts emailed to you because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website, where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As we can see here on the option chain for the November 21 options, we also bought these 60 strike call options and entered the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Now, how do we know these were new opening trades? Well, notice how the volume of contracts spiked up, reaching 4,650 contracts. That's significantly higher than the existing open interest of just 807 open contracts, which tells us these were new contracts being opened, not existing ones being closed. Because it would not be possible to close out 4,000 contracts if only 800 contracts were opened previously. This data is very important to confirm because if a wealthy investor is closing out contracts or trades, it could signal a sign they're losing confidence in the stock. And in that case, it might not be the right time for us to jump in. On the other hand, if a wealthy investor is opening contracts, like in this case, it could signal an opportunity for us to start a new trade. This is why we always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply flag every high volume options trade as unusual without filtering out closing trades. That's what leads to false signals, wrong results, and unnecessary losses for anyone following unusual option activity. But our deeper analysis filters out those false positives, which is why we consistently find more accurate and profitable trades than other websites. And in this case, our deeper analysis confirmed that this was a new trade opened by a wealthy investor, not a closing trade. So now, with that confirmation, we bought these 60 strike calls for about $150 each at a lower price than what we saw earlier on the options time and sales tape, since the stock dropped lower after that wealthy investor placed their trade. And so when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, this trade is going long bullish on Cheesecake Factory stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $60, the stock needs to trade above $61.50 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We do not invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. Let us know in the comments, do you think Cheesecake Factory stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.